This is Daniel. You're watching Unrivaled Investing. This is a no-hype, mission-focused channel to try to find you exceptional companies and unrivaled investments. Today we are looking at UiPath, which just went public via IPO earlier today. The stock ripped higher. It's one of the largest U.S. software IPOs in history, and I think they're tapping into a mega trend that we'll talk about in just a few minutes. So also, interestingly enough, I found out just in the last hour that ARK, Cathie Wood, her big firm, is making a splash buying UiPath across the various different ETFs. This is not surprising. UiPath is operating with a major tailwind, revolutionary space, a mega trend that we're going to talk about. So what is UiPath? The way they describe it is we make the software robots so people don't have to be robots. Just think about how boring it is to do some manual tasks. What if you could have robotic automation? And that's the name of the industry, robotic process automation, or RPA. That's the field that they're tapping into. We'll talk more about exactly what this is in just a minute and how there's currently a revolution going on in the space with machine learning. But first, I mean, you look at their numbers, and this is a legit company. You know, 580 million annualized recurring revenue, 65% growth year over year. Nearly 8,000 customers, 1,000 of which are doing over 100,000 in annualized recurring revenue. So they are getting the huge customers in the world that are paying top dollar. So they not only have the growth, but they also have the scale with these customers, many of which are the mega customers. This is a real company putting up incredible numbers, and it makes you wonder how much runway do they have left. And you know, not only do they have incredible growth rates, but it's sort of built off the fact that they have incredible customer relationships, incredibly sticky business, where their dollar-based net retention rate was 145%. The way to think about that is all cohorts prior to their most recent fiscal year grew by 45%. If you look at everyone before the most recent cohort, their business net expanded by 45%. And this wasn't just a one-off. You know, some businesses just call out a dollar-based net retention rate for 1 year because, let's say, they had some COVID benefit or something like that. This rate was 153% the prior year. So, i.e., the prior year, all the previous cohorts still managed to grow by 53%. So this is customers net spending more. And then if you remove the customers that are actually spending more and just look at the gross retention of their customers, it's still incredibly high at 97% gross retention. And it's not surprising to see this is best of breed retention figures, when their net promoter score, i.e., what do people think of this business? What do their customers think of this business? How often do they refer it? Is a positive 71. That is a huge figure. This is better than Apple and Tesla type of score. This is just as good as it gets in terms of customers are happy with it. Not surprising to see incredible retention with their figures. And so what is, you know, robotic process automation? What is this RPA field? And so the way they describe it, you know, trying to keep it simple here, which is that they're using machine learning to read the screen. So there's a robotic process. You're going to download it, your firm's going to get a license, and then they can see the process that you want to learn how to automate. And they're going to watch your screen as you do a certain function. So don't start goofing off and watch Unrivaled Investing at YouTube, you know, in the middle of a function. Otherwise, the robot's going to keep repeating it. But you know, you do the function, you do step by step, and then the robot's like, oh, this is how you do it. Then it learns based on your experience what you're doing, how you did it, what data you saw, and how did you interact with it. And it looks at all the different apps you're interacting with, because the workforce environment has gotten so much more complicated over time, where there's so many different apps. You know, it's not just, you know, one company running off Microsoft anymore. Now you literally have dozens of apps, different programs that people are working with in order to get their everyday jobs done. And so this is tracking on their screen. Oh, okay, you open this app, then you did that, and this is the buttons you pressed, and this is the data you entered from this field or in this email, and then you replicated it over here. Oh, could we automate all of this working with all these different apps? So this is all about learning what you do, learning the process, and replicating it. All right, let's go through some examples. And so, you know, one of the examples they talked about, and keep in mind, they talked about many different examples, is like the processing new orders. You know, someone calls in, you know, to say, hey, I'd like to order this, and they're saying it could take up to 30 minutes per order before UiPath with 100% human effort. Then once you start layering in RPA, or, you know, robotic process automation, you can get up to 90% of the job done by robots, get the job done in 3 minutes. So 90% time savings for processing orders. This, when you see an example where something's like 90% time savings, that means effectively a 90% cost savings for the company as well when you start thinking about that. And when you start talking about those types of big savings, you're talking about revolution in terms of industries. This becomes table stakes, meaning all companies are going to need to do this in order to survive. And so this is just a function of automating sales. When a customer is calling and saying, hey, I'd like to order this. Now, how could you possibly save 27 minutes on this? And they break through and some of the detail on like, well, wait a second, when you get a new order, there's actually a lot of repetitive steps of like, you got to download the customer's request, you got to look through the comments, unstructured content, like did they make a note specifically about their order where they want something different? How do you make sure you filter through that, entering the details of the order into your software, which is your enterprise resource processing tool, and then check your order, confirm the order, send it out, make sure it's being processed in the system, and then make sure the customer gets a receipt. So all these different steps of making sure an order goes through. Wait a second, the basic robot can step in using AI to say, oh, this is the process we usually do. Oh, if there's a note here and there's some sort of unstructured content that you're not used to seeing or it changes each time, we'll call that out for you to review. But everything else, the submitting it into these forms, making sure it goes into the order form, making sure the customer gets their email receipt, all these steps, with the exception of a few things, get reviewed. And so this is the reason why on this picture they go, like, oh, before UiPath and now after UiPath, look how happy he is it's a function of saying, hey, you don't have to do as much of the annoying repetitive tasks that you don't want to do. And it's more using the creative side, the creativity of saying, oh, okay, what's the special conditions with this order that I need to address? Really get your brain thinking that you might enjoy way more than just copying and pasting over and over again each time you get an order. And so when you start thinking about this, you realize that there's so many applications well beyond just looking at taking in orders. It's really anything that can be automated, anything that requires more than one step. And so you think about, financial close and reporting, where you're looking across multiple different, bank account statements, making sure everything's lined up, queued up, ready for, saying, hey, this was our official financials. HR recruiting, whenever you bring on someone that's new, like you usually have to have people fill in the same paperwork multiple times. What if you could just fill it out once and it fills out all the different forms? Loan processing, hey, you filled out these key things, it quickly, and an algorithm tells you. Another example, and you see this in the insurance space, is the example of processing claims. And what if it's, you're starting to see a few companies really making waves saying, hey, we can process claims in just seconds. This is done by robotic process automations. And then, you can update your customers. Oh, you just got this order. We should update our customer relationship management software. Everything gets linked because you have multiple different applications working together. Oh, you place the order over here. It should also impact your CRM software. So you could just start thinking. They have a list of so many different functions, and it's so obvious that they're tapping into so many different things. What this could do, this can impact everything, and it links into many different layers, many different functions. And so then the next question is, okay, it's really cool. I understand the potential here, but isn't there a lot of competition? And here's a chart from Forrester where they're sort of analyzing what the competition for the robotic process automation industry looks like. And they're saying UiPath is by far one of the biggest players and is one of the leaders, both in terms of strategy and their current offering one of the best things. And so this does make me question, is this unrivaled? This is a key focus. That's hence the name of this channel, Unrivaled Investing, is because I want to find things that are exceptional. When you're unrivaled, it gives you the right to win over time, makes it easier for you to grow. And so I want to see, is this unrivaled? Let's look at a couple of the clues real quick. And so, in terms of understanding, going back to this slide, in terms of thinking about could this be unrivaled, I think the more integrations you have with the more apps, the more value you ultimately can offer to the enterprise, because you can say, oh, my software, this RPA software can work with all these different tools that you might already be used to. You have bills that you want to make sure are sent out or processed. Boom, we work with Bill.com. Or you want to make sure your orders are going through. You have NetSuite or payroll, ADP. They work with all these major name brands. So the more integrations you have, the more valuable you become. The harder it is for competitors to step in. So seeing all these name brands, that's a big deal. And then here, this one was honestly a little eye-opening for me, seeing this in their financials, where they call out effectively that they have a lot of different partners and resellers of their solution. But it was really interesting to see that the big four, so this is the big four accounting firms, are their partners. So they effectively resell or recommend or suggest that their clients use an RPA solution. And this gets back to, how do you make sure you close your quarter in a timely way? Make sure you close your financials in a timely way. And the fact that you have these major accounting firms, this covers the vast majority of the big behemoths out there. No wonder why they're winning, because you have these guys as your partners, as your resellers. And so it's not surprising to see the type of logos that they're winning, like CVS Health or Chevron or Cleveland Clinic, Adobe, Rogers, Chipotle, AAA Insurance. I mean, these are some really major logos, and it's not surprising, especially when the fact that you're winning because you're with the best of breed. You're covering 90% plus of the major companies out there with having the big four auditing firms as your partner. And so not surprising that you have 8,000 customers, or 60% plus of the Fortune Global 500, or 80% of the Fortune 10. I mean, they are tapping into the major companies of the world. CrowdStrike, another one. And so, as you think about it, it's not surprising. Once you get your foot in the door, you can start rolling out additional functions where you say, hey, this might have worked well for billing. Why not HR onboarding? Why not, deal with our financials and month-end close? Why not look at accounts receivable and all these sort of processes that can be automated? So this gets back to, it's not surprising to see that 145%, that 140% plus net revenue retention, as customers say, hey, there are more use cases. This is a fully automated enterprise. That's the future. More and more use cases that they tap into. And by the way, that makes them more and more valuable, because they have more and more templates to lay out. Say, oh yeah, we've done this. You want to take care of billing? We've done that 100 times. We've done that with the best companies. Oh, you want to do financial month-end close? We do that too. We've done that all these times. So the algorithm also learns from other companies' exposure, and so then it's easier to roll it out, effectively saying, oh yeah, here's the template for loans processing. Here's the template for insurance claim processing. We've done this a bazillion times before, and it had a huge impact for these companies. It's table stakes. You need to go through us. And not surprisingly, you see some of the, this is the feedback or case studies where management is calling out, hey, here are some of the customers, what they've had to say. And this fits with the incredibly high NPS score that we've seen, where it says the breadth of product, roadmap, and culture set it apart. This is why Voya chose them. Or why did Applied Materials choose them? They said only UiPath had the complete solution. This gets back to this point of, over time, you offer more and more functionality. You spread across the company, saying, hey, we have multiple different cases across different departments. That's a lot of value for the big companies out there, whether or not you're a bank or a telecom business or Applied Materials. So the greater breadth you have in terms of your solution means that you're going to win. This does start suggesting that you're unrivaled, but I also want to see it in the numbers. And so, you look at this and you think about this, and they're saying, look, the fully automated enterprise market, this is 60 billion plus. I actually think as machine learning gets smarter, gets brighter, watches what people do, and this becomes sort of best practices that's commonly accepted, I think this can become just ubiquitous and can be huge over time. Because at the end of the day, you want the software that's working well, that makes your life easier. That's the difference of having, let's say, a 10% margin, maybe a 30% margin, as you're able to scale, make your workforce that much more productive. So I think these figures might actually even be low as I think about this. I mean, either way, if you're tapping into a marketplace that's tens of billions of dollars of potential, and you're doing, let's say, under $1 billion in revenue, that clearly suggests 10x, at least 10x upside, which is also another key aspect that I look for all prospective investments. And so then let's actually start looking at the numbers of some of their competitors. And so this is getting back to the Forrester graph where they're calling out the different types of players. So you see Appian, and they're putting up effectively teens% growth last year. So this is what I like to see. I see Path Stock, so that's UiPath or Path Stock, PATH Stock. They're not only bigger, but they're growing faster. So this means you're offering a solution in the marketplace that is resonating better with customers, and you have a better approach to market, better approach to hit out and capture those customers. Another company that was called out with the Forrester research was Blue Prism. Another example, UiPath or Path Stock is bigger and growing faster. And also, I think better recent cash flow profile as well. And so what about the valuation? Is this the time to buy? It just IPO'd. You see ARK's buying it. You can hear from my own voice that I think this is a really interesting setup. About that, let's actually do a quick plug, if you will, where, what are you watching? So my name is Daniel once again, this is Unrivaled Investing. And, if you enjoy learning about potential multi-baggers, please make a point of subscribing or hitting that thumbs up if you're already a subscriber. And if you want to follow my personal journey as I buy potential multi-baggers for my personal portfolio, each month I have a few things exclusively for Journey subscribers. So you go to unrivaledinvesting.com, click on Journey, and the first is at the first week of the month I call out my full portfolio, and then the next thing is later in the month I also call out at least one potential multi-bagger type of company that I think could potentially go up hundreds or thousands of percent over time. This is building a community of like-minded investors interested in trying to find potential multi-baggers, as well as exclusive content like what I'll talk about in just a minute. Enough about this. Let's keep going into understanding UiPath. And so as I look at the valuation, it's currently around a $70 stock price. This is around a $36 billion valuation. So they posted about 80% growth in their last fiscal year ending in January 2021. So what's their growth in the next year? That's a big question mark. So I'm putting a range, trying to be conservative, of 50 to 70% growth for this next year. We'll see what it looks like. And then what's the margins? What do you think their operating profitability will look like, at maturity in terms of valuing this business? It's not here now, but what could it be at maturity? And, given that their gross margins are close to 90%, and this is a very traditional licensing business model, I look at this and I'm thinking, with a traditional licensing business model where you have the license and then you have the software support, this could be really lucrative type of margins. And so, I'm putting in a range of margins of, let's say, 45 to 55%. You can, could it be higher? Could it be lower? Absolutely. This is just a framework. I always like to have a logical framework when I'm looking at potential investments. And so, of course, could the stock price go way higher or way lower than whatever I pencil out? Of course it can, but I like having a logical framework that sort of says, hey, what should this fundamentally be valued at? Slap on some sort of 25% tax rate, and you see that the pro forma earnings, assuming they get to optimize margins for this next year, is effectively 85 to 120, which is pretty rich given that the growth rate I'm penciling out is 50 to 70%. And it is a pretty rich price to sales multiple of effectively 35 to 40 times. That is a very rich multiple. The question is, could they continue this hyper growth in the years to come? I'm penciling out in the ensuing 4 years a compounded annual growth rate of 35 to 45%, an end multiple of 25 to 40 times. This is, once again, investors can make their own choices if they think this is going to be too high or this is too low. And, based on this range of 25 to 40 times, I'm effectively saying, hey, there's about 100% upside and about 30% downside, which is a pretty, no question about it. This is a very rich, very full valuation. And the risk reward isn't crazy compelling, in my opinion. I think there are cheaper, better risk reward plays out there where, the types of things where I think, hey, there's 200% upside here and not as much downside. And keep in mind, if I'm wrong about their growth rates, this downside could obviously be worse. And, look, not all stocks that I cover are in the too rich category. I did a video recently on Alibaba where I was like, look, here's a valuation that I think is actually quite compelling, and it's something I also, in full disclosure, I personally own. And as an example of potential risk reward that I find much more attractive, I did call out for my Journey subscribers my April 2021 potential multi-bagger where I'm like, hey, I think this has 4x upside and the downside's not that bad. But I will post an exclusive follow-up to this video on what price I would consider, buying a couple percentage. So I'm not really there right now in terms of making it, let's say, a big percentage of my portfolio. I'm not ready to pull the trigger when I'm looking at this current valuation. I just don't. It's pretty rich. It's first day pop, and you have the ARKs of the world buying in and pumping it up. So I'm not quite there in terms of valuation right now, but I will talk in an exclusive video that I'll leave a link in the comments below, so that way if you're interested in looking, that will be for unrivaledinvesting.com. It'll be an exclusive video. And if you enjoyed this video learning about UiPath or Path stock, please make a point of subscribing and hitting that thumbs up. Thanks so much for watching.